Hey everybody, Signa here with the OEC. In this video, we're going to talk about backtesting a strategy or entries or techniques. A lot of people focus on downloading data, buying some external software program. They spend a lot of time and effort using Thinkorswim's on demand, and all of those things have a lot of flaws, including the fact that you might have to buy something, you're spending money trying to figure out some new program or application or product. And with the on demand, it's just a real serious pile of crap and it is a big waste of time. So, how do we figure out how to do back testing in a way that can be done on almost all trading platforms? Doesn't require you to go learn some new uh, platform and can easily help you start to figure out what works. And it is called the hard right edge. So in this example, you can see I'm sitting at 9:28. This is it's showing 8:28, but it's based on Kansas time. I want to go in and I'm going to change this from Central time where I live and put it on East Coast time so that it is actually reflecting the market getting ready to open at 9:30. Now, what I want to do is, for an example, in this scenario, we want to look at the open and decide what kind of entry technique, for an example. Say that's what I'm working on. I'm looking at how to get into a trade at the open and what technique I would want to use and how does it perform. This does not show a trading strategy from an idea of you don't know what the market's going to do. Not like when if you randomly pick a day in on demand, you could pick some day that you haven't looked at, you haven't studied, and then perhaps you could try to trade it live, quote live, and that's not what this is doing. So instead, what this is doing is you are choosing what you're about to back test, and then you're going to see how that would perform if you made that decision and pulled the trigger. All right, so let's turn on a Globex line. This will help us see if we expect the market to go up or down at the open by asking where did the market close the previous night. All right, for some reason that didn't show. Let's see what I did wrong here. Show only last period. No, we want to show every period and then turn the color over to something that we can see on this brighter background. All right, so at the open, we're looking for a market to move up and we're aiming for that line. So we're going to be doing a gap resolution for this line. And we are looking at this entire perspective from if I was to look to get into the trade, what technique would I use? What entry conditions would I use? So I'm on a 400 tick chart. We could, of course, put it on time. We can run, two charts. This is a 5 minute, and the one on the right is the tick chart. So in this perspective, we can see that in the first 5 minutes, the market came up and hit this Globex line. We could have already had that line in place. So one thing that we have been able to recognize right off the bat is before the market opened, we should have put on this line. So we learned something right away. The next time we go to trade the open and we're watching the clock minutes away from the bell ringing, we want to look left and mark out any immediate pivot points that may interfere or react to stop the market from moving up. So we learned something already. The market reacted when it hit that level. While we're there, what would happen if we had also marked this lower pivot? Would that have helped us out? It looks like when the market opened, it started to fade first before it did anything else. And it looks like it found support at that level. Is there anything else we might want to mark out back here? There are all these pivot points. These are very near term, very short term pivots. They're not very strong. They're not institutional. And if you get to marking too many of these, pretty soon you've just got a whole chart full of junk, right? You'll have so many lines, you won't be able to do anything with it. So you are going to have to find some balance. I would recommend at least catching the nearest closest one, the one right before the market opens, right? Even if it's this one and this one. But we're going to leave all of those in place and see how the market reacts as we get to it. We're also going to drop the tick just a little bit more from a 400. We'll go to a 200. Now that's a very extreme tick, right? And I don't want to imply that it's not. It really is. It's a very extreme tick, but we'll run with it. So this is hard right edge, all right? The logic behind this, it can be done on a daily, monthly, weekly, 4 hour, 4 minute, whatever it is that you're focused on. It can be done on all of those, okay? So we're lined up, we're ready to go. Every single time I roll my mouse wheel, I get one candle at a time. So I could ask the question at the bell. The market starts to rock and roll. We've got one candle, almost no wick at the bottom, no wick at the top. This candle closed 200 contracts with full strength and conviction behind it. No hesitation in this candle whatsoever. Okay? We know that. It's a fact. There's no dispute. We learned something already immediately about this market as it's opening up. Where would we get in to close this gap? So far, if we wanted to join in at this point, we would have had to just hit buy market or had a resting order above the market where it would catch us on the run. That's a very dangerous thing, right? Why would we want to put on a trade moments before the open or right when the bell rings, when the only thing that we know right now is that we're expecting the market to close the gap? But it could fade first before it closes that. It could do a lot of things, right? We want to know, where would I want to get in at? Well, there's the next candle, the very next candle. This 200 contracts traded. It continued to move up a little bit more when this candle ran full strength all the way into the close. It opened and ran more to the upside, and then it faded all the way back down and gave that back. So if we had bought in on the run, we would have already been stopped out. We need to find an entry. The next candle. And notice that by this time, we're starting to get into a few moments have passed. Enough time has passed. We'll move this candle over. We're still looking at, let's get these lined up so we're seeing both of our mice on one screen. All of these are a part of that 5-minute candle. All of these. So this has not even been 5 minutes yet. Right? We're going to roll back. No peeking ahead. Where's our entry? So in that next candle, it ran down all the way, started to come up just a little bit. Market opened. It had some hesitation. It had some fluid, some liquidity through here. Still not seeing an entry yet. Now remember, we're on the NASDAQ. So one thing we could add to all of this is the quarters or the 50s. Right? Where's my quarters? Where's my 50s? Are they going to offer me anything? We can take this 75, and I'm going to just throw some lines together and I'll be right back. All right, I added a few more quarters. So in the next candle, we closed green, but we've already gave back most of what it earned again, right? So now we've got a lot of structure building right here at that 93.92. We've got a quarter under our feet at 93.75. We haven't touched that at all. And so far, we are just really tight right here on the range. That's all that we know at this point in time. And I would recommend that this would be a time to immediately throw on a line catching the top of this candle. It is going to offer some perspective, right? Next candle. We've just finally broke new high a day. We've got a lot of strength and conviction in this candle. It's a thrusting candle. I still don't see an entry other than jumping on the train, right? Of course, we can keep that in mind. We can do that at any time. We can just hit the buy button. But if we want to trade with some structure, we need to see some structure, right? There's a pullback to our line that we just drew. It closed there. Now we're starting to see a pattern. We're starting to see this movement, this dynamic pushing us towards that gap close way up here. So we're moving in the right direction, but we don't want to get in yet. Why? Why do we not want to get in? Because that 9,400 is right there above our head. The NASDAQ is very responsive at roundies. If we go and jump on this trade right now, we're looking at getting stopped out right there at that 94. You could even just be looking to take a short off that 94, right? A small trade, contrarian setup. It tags it, pulls back 6 points, pulls back another couple of points. Now we're down almost 9 points off of that entry. That'd have been a decent trade, right? Just a real quick snatch and grab. What a move right there. With strength and conviction, it broke through with it's a strong engulfing candle, thrusting candle. And where did it come from? Right off that 93, 92 line. The same one that we had interacted with multiple times. So when we talk about using a resting order, this would be a great example of using a resting order. Yes, you would have took some heat, but you wouldn't have took 2 points. Okay? You also would have participated in a massive move to the upside. But if you look at this and you say, well, could I have done that every time? We drew the line when it was looking like this. What if I put my order in after we started to wick through this? Anytime in here. Anytime that we had broke above this and closed here, could I have just put my order in at that point? Remember, we're looking for an upside move. We've got the 94 over our head. If we're comfortable with an 8-point trade, would this be acceptable? It is only 8 points. I don't think that's enough profit for the amount of risk that we're looking at. We really need to get above that 94, even with all of these candles that we've seen so far, right? Even here with that strong thrust, we're finally above the 9,400. But is it going to resolve? It didn't. It didn't hold at all. It broke right back through again, right? So where's our entry here? Now this is a great pullback. That's a great pullback to go long right there. The only problem is that damn quarter, that 9,400. What are we going to do with that? We're not resolved yet. Third time's a charm. We come back across it again, right? Now we've got resolution above 9,400. What are we going to do for an entry? We haven't even had 5 minutes of market yet. Now we've had enough market run by that we've got enough signal here to begin thinking about taking a trade. It still hasn't been 5 minutes yet. I want to see a pullback somewhere near this 9,400 where I can get in. And I definitely don't want to see it closing below that 9,400. It's obviously not wanting to let us in. Look at all these wicks down here. All of those wicks are indicating that there is buying pressure, that every time the market got anywhere near this level, the buyers were stepping in. We're starting to get that next pullback. Now, I'm sure by now, most of you would have already jumped in. You jumped the gun. You're impulsive. You don't want to wait. You're not waiting for confirmation or setup or structure. You're just seeing this move right here and you just jumped all over it. Would it have worked? Yeah. Well, I mean, look at the follow through. It would have worked. But on what basis? What is your entry conditions? So again, we rolled down. This hammer is a reversal signal right there. If we had got in on that next candle, anywhere in that next candle, but hopefully towards the low, right? It closed at 94.07. We could have got in anywhere in that candle for the next move up. We'd have got stopped out. So where's my trade out of all of this? Now, we didn't hit that roundy, but we damn sure came close. Finally, our first opportunity to go long based on some structure. And look, we've only passed a minute and a half. We haven't even hit 2 minutes yet. We finally had a market get near that 9,400. Of course, we could have traded any of these on the run just by hitting that buy order. I'm not suggesting that that's not a choice, because it is. But if we want to use a trade based on some pullback with structure in it, because we're looking long, we want to trade off of a pullback. We don't want to go long after the market's already been running long, right? Look at what the market does every time it makes a big run. It pulls back. So don't buy at the highs. Quit doing that. You've got to get enough conviction to buy in at these lows. Choosing which low is going to come with time and experience, but watch the way that these candles are forming with these wicks. All of these were giving you a signal to go long. It's not a massive trade, right? You're talking about an 8-point move, a 6-point move. If you're willing to have bought and held through all of this, then you're just buying on the run, and you wouldn't need to watch this video. We're looking for something outside of just buying it on the run. So there was a lot of chop at this point. We've finally passed 3 minutes, and we came up. It's time for another line. We came up and we hit this next level up here, right here. We hit it and took an immediate rejection off of it. This is what we call a soft rejection. This is a soft rejection. Now, if we'd have looked far enough back in the Globex, maybe we would have seen what we hit. I'm not interested in doing that, though. I just want to get through the video before this gets too long. Now we've crossed that 9,400, and now that's no longer a soft rejection. That's a hard rejection. And at this point, we're getting close to that 5-minute candle being formed. That's why they had this big wick right here on the 5-minute candle. We can already see what happens in the next 5 minutes. We have a strong rally with, again, a lot of wick at the top. So we know, we can see, if we wanted to cheat or look ahead, that we know what the market's going to do. I would recommend that this is finally your first opportunity to get in. But what if it didn't come down and let you in, and you had your order sitting down here that whole time, and you were saying, well, when it comes down to that 94, I'm getting in, and it comes down and it almost lets you in, and it runs away without you, and you miss your entire opportunity? That sucks. But you can put two pieces together. You can say, I'm going to have an order at the 9,400, and I'm going to let this come down, and I'm going to get in it. In that next candle, when it opens and gives just that little bit of wick and starts to run, then you can hit the button and hit that buy order. Right? Now you can just go ahead and jump in on the run, because you had your entry defined. You had everything that told you that you wanted to get in on the lows. And this is telling you that's as low as I'm going at the moment. And you'd have had an 18-point trade. You'd have never took heat. You'd have never been in the negative if you'd have jumped in on that trade. Would that work every time? Well, you can do the same thing on the next day because you can roll backwards and use the hard right edge again. Use this hard right edge to ask the question, what if? I'm not promising that it's pretending to trade or that you could see how it works out because your mind already knows. We can see here, we know what's going to happen. We can't pretend that we're taking a great trade and that that's going to work for us in the future. That's not what we're trying to do. We're trying to ask the questions. A lot of how I trade is asking the market questions when I'm live in the market. Are we going to close that gap? Is this roundie going to hold? If it holds, can I get my trade? Right? I'm asking the market questions, and then I follow through with that by taking a trade. You can use the hard right edge to perform this on almost any broker. Set your mouse wheel to roll one candle at a time so that you can perform this hard right edge and see how it works out for you. Find out, what if I did get in at the lows? What if I did let it react first and then took a trade, right? Because we don't have to get in right at the low. We only need some of the middle. What if I did go short off of the nearest pivot? Instead of doing the 5 by 5 or including the 5 by 5 that you've already got, what if you're drawing these lines at the closest and most immediate pivot point to your left, like this one here, like this one here? I wouldn't bother marking that one. It's just so close to the roundie. I'd let the roundie do its job, right? And if I do those kind of things, what if I had taken it short here? Would that work out at the next open? Could I go back and do the same thing? We can. We can hard right edge all of these. You can also run statistics this way. You can say, if every time it comes down and hits a roundie, can I take a contrarian trade for 5 points? You could go and roll your mouse wheel at every single place that the NASDAQ hit a roundie and see how that worked out. You could ask the question, did it work? Could I get 5 points here? Yeah, I could there. What about this time? Yep, I could there. Right? Well, what about this time? It broke right through it and failed. So win, loss, win. All right, well, it did it 3 times, and I got 3 trades. All right, you're starting to see how the logic works out on that. There's so many ways you can use hard right edge. Just don't lie to yourself or pretend that this is actually going to be a trade where you could say, well, yeah, I'm going to do this every single time because this shows me that it's a 20-point trade or a 50-point trade or that it's going to work out. This is going to help you form the basis for how you want to perform your trades. Whether you're testing entry logic, stop logic, momentum trade, volatility, volume, however it is, whatever it is that you want to recognize, you can use this. This is hard right edge in its most basic form. As far as backtesting goes, this is better than buying some software or program or learning some different application because you can do this on almost any broker that you have. Okay. So guys, I know this ran long. I'm sorry about that. I appreciate your time, and I look forward to seeing you at the next video.